Hello everyone, welcome back to Nando's Equity. Today we are going to have a deep analysis of Nippon India Small Cap Fund, which has stopped lump sum investment, and we want to know why and is SIP allowed. This fund has given more than 1123% in 10 years. It is almost like 11 times of returns in 10 years. Let's get into the details. So Nippon India Mutual Fund is one of the prominent mutual fund houses in India, formerly known as Reliance Mutual Fund. It was renamed Nippon India Mutual Fund after Nippon Life Insurance, a Japanese company, acquired majority stake in this firm. This fund is one of the superstars in the small cap fund. I'm going to mostly refer to the direct plan. As I always say, direct plan is going to benefit you more in terms of NAV and also expense ratio. So this has about 0.79 expense ratio. Fund size is more than 45,000 crores, and CRISIL rank has reduced from 5-star to 4-star last quarter, and this scheme has given more than 60% in 1 year, and it's almost like close to the benchmark, small cap benchmark. So predominantly this fund has about 95 to 96% in domestic equities, and most part, like more than 50%, goes into small caps, about 10% in mid caps, and about 7 to 10% in large cap, and otherwise they keep cash and other instruments. So quite suitable for investors who want to keep it for 3 to 4 years minimum, and expecting very high returns, and also ready to take high risk because there could be higher losses if the market turns bearish. And as I mentioned, the CRISIL rank has reduced to 4. So what is the investment philosophy of this fund? So this fund focuses mostly on better risk adjusted returns, and looks for market capitalization which is below the top 250 companies in India, and potential mid caps that can turn to be tomorrow's large cap, and small caps that can turn to be a mid cap tomorrow. That's what their focus is, and their fund focus in terms of identifying companies that has very good growth potential, business model, and reasonable size and quality management, and of course rational valuation. And they always look for margin of safety, good diversification, and also risk adjusted performance overall. This fund we already saw has given a lot of huge returns, like 11 times returns in 10 years, and from the time of inception from September 2010 it has given about 1600 plus percentage. It's all like absolute returns, but when you convert it to annualized returns, it's somewhere about 23% from inception, and lucrative 28.42% 10 years period, which is quite high. Even if you look at the SIP returns, it's quite amazing, like since inception again close to 1600 percentage, and from annualized returns about 23% since inception, of course 28% for 10 years period. This fund manager is also quite famous, Samir Raj, and he has been heading this for quite some time. He has been part of Nippon India for about 16 years, and he has been the fund manager for about 14 years now. And he says that small cap investing is not a sprint, and it's a marathon. And also he has shared some of the tips, like they monitor about 500 to 600 stocks in terms of identifying stocks, and also they have some filters for about 200 to 250 stocks. So when we jump into the portfolio, you will understand why this is required, because small cap fund management is not easy. This is the top 10 holdings: Tube Investments, HDFC Bank, Oldham, Upper Industries, MCX, BHEL, SBI, KVB, NIT, Interglobe. So if you look at, they have more focus on industrial products, and then electrical equipment, banks, auto companies, pharma, construction, and consumer durables, capitals, finance, and chemicals. So very widely spread. If you look at, apart from the 10 top stocks, if you look at the next one, you will be amazed. They have about 199 stocks in this particular portfolio. Not really easy to go through everything. There are about 199. Apart from what we saw, the 10 one, it's about 189. So it's a clear spread. Nothing they have more than about one, not even close to 1%. Apart from the top 10 to 20 stocks, everything is less than 1%. So not just this fund, small cap funds could always be risky and may not be suitable for short-term investors, because it could be highly volatile, especially during bear markets, and it could underperform even with any kind of benchmarks and liquidation issues. We have seen that stress tests that SEBI wanted all the small and mid cap mutual funds to do. That's one of the things. And it also provide lackluster performance for long term during bearish market, and also due to several factors at times. And also it could cause short term losses, especially when the fund is not performing well or the whole market condition itself is not conducive. So please keep all this in mind when you are approaching any small cap fund, not just this fund. A lot of things happening around the small cap funds. There has been a request or direction from SEBI for stress test, and considering the surge in inflow, this fund has restricted lump sum investments, and since July 7, 2023, and now only SIPs are allowed. Various valid reasons why they do not want to bring in too much of flow, and they want to control it, want it to be gradual and systematic. And there has been a lot of sharp rally, and especially in the small cap space. So they do not want to have liquidation issue after it grows too big. And of course they want to utilize the opportunities in the future. Overall, Nippon India Small Cap Fund has provided outstanding performance and yielded excellent returns. And it's not available for lump sum, only available for SIP. So you should always consider your overall portfolio, and also do not put too much of SIPs only in small cap funds. Try to diversify, and I am no way suggesting to buy or sell this particular mutual fund, as I am not a SEBI registered analyst or advisor. Thank you for watching. Hope this video is useful to you. If so, please click the like button. If you have not subscribed, please subscribe. Thank you.